Welcome back. Hope you had a good week in the stock market. It's June 25th. I'm pissed on multiple levels. Today we're going to talk about GME, talk about the SPY, overall market. We're going to talk about crypto, 002, failed delivers, Russell rebalancing, all this stupid stuff I don't know and I don't care to know. But we're going to go over it. Starting with GME, and I'm just going to go over technical analysis on it first. TA, here we go. On the hourly, bearish. We've got a MACD crossover. We've got the 9 moving average below the 180-day moving average. We've got lower highs, lower lows. Yeah, well, not lower lows. This is a floor here, but if we zoom out a little bit, it's lower lows. On the daily, it's also bearish. This big candle basically set it off. Everything below that, we've got, red candles below the 9 moving average. We got a MACD crossover up here. Looks like it's kind of setting up a floor, but there's no, it hasn't consolidated to show signs of reversal. So expect to dump down to 180. I don't know. That's what TA tells me. I was not going on TA this week that much at all because I was so hyped up. Failed to deliver was this week, June 24th. That ended up being June 25th potentially because it didn't happen June 24th, and everyone's like, oh, it's Juneteenth. Federal holiday. All of a sudden on a Wednesday they said let's have a federal holiday. So on Friday, SEC said no, we're not going to work. It's federal holiday all of a sudden. So failed deliver got pushed back a day apparently. I didn't see any failed deliver covers today. Market makers, hedge funds, those that control the stock market, they came up with a new sorcery potion to not cover failed delivers today. I have no other explanation for that. I'm sorry. Maybe at some point I will. 002 was active yesterday. Supposed to be 2 days ago, but apparently it was yesterday. And then they were going to look at the last hour of trading. So it wasn't really yesterday. They're going to enforce it. They were going to look at the last hour of trading, see how it went, and then act on it today in the first hour of trading. Who knows what that's going to look like? I didn't think it was going to look like this. So 002, it's possibly a dud. That, or they're just not enforcing it, which is some people's consensus. I don't believe that. I don't know why they would carry out new rules, make new laws to not enforce. That doesn't make any sense. I understand the not enforcing laws. I don't understand putting them out to not enforce new ones, unless if they're waiting for something. They're lining up different laws and different things in place, different rules, and then they're waiting for a certain time, a certain trigger that they want to do it. That's the only conclusion I can come to, because I don't see 002 here. Maybe this is what it looks like, but I don't think so. I don't see failed delivers here either. And that one I can't get over at this point. What I do see at the end, and this looks like a Russell 2000 to 1000 rebalancing. And that's probably what a lot of the sell-off was today, was Russell 2000 selling. Russell 1000 sells apparently in the last, or in after hours. And sometimes you'll have front runners basically to that. And I think that's what this price action was in the last just a few minutes of trading today, which was crazy. Tons of volume came in, it shot up, and then we closed. So we're gonna go over the plays, we're going over options. I'm gonna talk about a lot of different stuff, but one thing to mention here that's kind of a question, and some are freaking out about. I'm not sure if it's merited, but if you look at the volume, I mean, this was the biggest volume we had all day right here. It's these little volume bars. This was 235,000. That was the biggest one. That was the biggest volume we had all day. After hours hits, and we get way bigger volume. So, okay, this is the rebalancing, right? This is Russell 1000 buying shares, because all day was selling of the 2000, right? So I don't quite get why we don't see any price action for that. Someone I'm sure can explain it, but yeah, right here, this volume is 1 million right here. And then this volume over here is another 1 million, zero price action. So maybe that's totally normal and not to really think about. Some people are posting that there's billions in volume. I don't know why I'm not seeing that, but I'm not. So I'm not going to worry about it. I've done the best trading GME when it's been strictly technical analysis. I've looked for signs of bullishness, for volume, for, MACD crossovers, for good candlesticks. Once I've kind of shifted into this, trying to get more fundamental, not fundamental even. I mean, it is fundamental, but it's not on the business. The fundamental is the long term, and I believe in that. Let's talk about Express and AMC. So why I think that was a Russell rebalancing on GME in the extended hours is because we don't see it on something like AMC. We see these little volume spikes, but these are tiny. These are tiny. So those ones in GME were huge. I don't know any other ones that were transferring over from 2,000 to 1,000 today. Feel free to look at those and say, okay, yeah, it happened with all of them. I don't know. It's not a huge deal to me. Next week could be the short squeeze. It could be the start of the short squeeze. Volkswagen short squeeze, it happened over a weekend. It started with a huge dip into the weekend. So Friday closed, huge dip, like way bigger than we saw on GME. Monday, the short squeeze started, and it was insane for multiple days. And Volkswagen became the biggest company in the world for a day. I'm hopeful that that was this Friday today, and that this is the weekend. This is the Volkswagen dip weekend. Look at the charts on Volkswagen and see what I'm talking about. Let's look at AMC here real quick. Let's look on the daily. AMC is one of the shorted ones. I think it's probably being used now by hedge funds to build capital and to basically build up their accounts so that they don't have to cover GME, because if they're good on the books, then they're all good. So here we go. January, this is March, run up. This is very similar to GME. And then they both kind of built this big cup, GME and AMC. And then AMC built this little handle, and then AMC starts to run. Boom, 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 boom. Crazy, crazy. Basically 3x times past their January of $20. They went almost up to $80. So AMC's done the run. My theory, maybe the hedge funds are going to go through the different shorted stocks and do the same thing. They've done it on AMC now, which now looks bearish. We've got red candle under the 9 moving average. We've got a MACD crossover. None of this looks like it's going to keep going up presently. Looks like it's probably going to come down maybe to this 30, maybe even back down to this 14. We will see. I feel like AMC is probably going to go bankrupt at the end of this, which seems crazy. They've raised so much capital, all this stuff. But what are the shorts doing right now? They pumped it up. If that's true, if they pumped it up, they're going to be gathering, all this distribution phase, it's called. Accumulation? Distribution. They're going to be gathering their shorts. Tons of short positions. They're going to make so much money on this drop. It's going to be insane. And that could potentially hold off the GME squeeze longer. Wah, wah, wah. We will see, though. Who knows? But they're going to make a lot of money, and there's not much fundamental behind AMC, unfortunately. This was a dying company before COVID, and COVID just accelerated it. So I feel like this one will probably be bankrupt in the end. That CEO and maybe a few others will make it out pretty well. Here's COVID right here. So the last couple years, it's been dying to streaming, which makes sense. There's 2018. Here is COVID crash. So it's been dying, COVID crash, and yeah, this just accelerated down to a penny stock. And then little bumps, and then we have this short squeeze. And then we have the hedge funds squeeze. So quick little analysis on Express, another shorted one that went up with January, February. It set up the same cup that GME, AMC have done. And then it did this little handle. Let me zoom in a little bit. There we go. Did this little handle it's doing. And then the last couple days, actually, I haven't been noticing it, but it did this little handle. Here we go. See this handle on the cup? Anyways, I'm just showing you how it's similar to this one, as well as GME. Little handle, and then look, it started breaking out. I wasn't paying attention to it, and today was a big day on it. So I got a lot of shares of it. We've got a lot of volume. It's broken past this high of this cup. This is the same price action we saw on AMC. I am hopeful that the hedge funds or whoever or whatever is going to happen to Express that happened to AMC. We can get some capital there and put it into GME. So that's the plan. As you see here, this was the first day AMC broke that cup, and then it went crazy. So I'm wondering if the hedge funds are just going to go through all these shorted stocks from January and do the same thing they did to AMC. I don't know if they have the time or the power to do it, but yeah. So I think I got a pretty good position in Express. Nothing like GME, but a little something. And the SPY, the overall market, of course, just gonna go crazy and do all-time highs again. Full-on pump and dump going on here. We've got this should have been the top, started to correct, and then Powell said, we're only 5% inflation, even though your lumber prices you're paying at Home Depot are 500%. Okay, cool. Market loves it. Don't worry about those. Don't worry about those home prices that have gone up 20% in the last year. That's totally normal. It used to be 6%, now it's 20%. You're good. So we just ran up on that. Great. And then, okay, now we're finally going to start correcting. Biden says, hey, you've been living for free. We haven't evicted you. We want everyone to live off the government and pay the government for rent. So we're going to push it out one more month of evictions. Instead of it being June, which we said we were going to do in March, because we extended it from March to June, we're going to say now July. So boom, love it. All-time highs in the market. Here we are. Market is frothing. If you look at 2008 and other crashes, it looks very similar when you get to a top. It just starts flattening out, but also getting volatile with these bigger swings. You see a lack of volume up here, so it's not supportive of this price action. See low volume here, very low volume here. And I think today would have probably been the lowest volume on the SPY if it wasn't for the Russell rebalancing. Shot a bunch of volume into the SPY that basically made it look like a penny stock the last like 15 minutes. It was insane. Or biotech company. It was nuts. Anyways, let's go over the plays really quick. We had puts that we sold at the beginning of the week. They gained value somehow. I bought them back yesterday because I was like, GME on the chart does not look good. So I was like, I want shares, but I want to get them cheaper. It's going to keep going down. This is stupid to hold them. So closed them out, made money. This morning, though, after thinking, okay, maybe it was Juneteenth, seeing the write-up on it, and I was like, that makes sense. Expecting today to be a fail to deliver, which I don't think it was for whatever reason. Maybe it's on Monday now. I don't know. Anyways, I opened up more puts this morning thinking, okay, fail to deliver today, sold puts. And yeah, I am now the proud owner of, I think, 400 new shares of GME. So I'm stoked about that. But I'll show you. So it's a 212.5 put and then a 215 put that I sold. GME closed today, what, 209? So these are in the money sold. These will be exercised, which I'm happy to slowly scale into this position. And then I opened up some puts for next week. We've got a 202.5 and 205 put for next week. And then all the calls that expired today are, of course, worthless because no fail to deliver, no 002, no crazy good price action from Russell. So yeah, today's performance says this. It's not, though. I don't know why it says it's that. It's all messed up actually right now because this put, it says we're up 61%, market's closed. I'm not sure, but yeah, we didn't do well this week. I think we lost a few thousand for sure, but we also bought shares, so that was nice. Our express position I will show you right here. It's down 11%. Wow, down 11%. I bought 500 shares of it, so hopefully that one works out. Let's actually see what we did today. Wow. Okay, so we bought to close puts, open up new calls, bought those express shares. I was so pissed at the SPY, I started opening up more SPY puts. Oh, I sold a KMX. So remember I talked about was it CarQuest? KMX had earnings. One of the other inflation things that Powell seems to think is not a big deal. Used car prices are like more expensive than new cars right now. Literally, if you bought a car a year ago and resold it right now, a used one, you'd make money on it, which is insane. If you're buying new cars from the dealership from a couple years ago and they've got 50,000 miles on it, firsthand experience, I know that the dealer will spend and pay you back money to give them the car back. Okay, anyways, CarMax had great earnings, so here we see a big run up from that. We had calls for that earnings and they did pretty well. They were up 140%. I sold one and then I legged into another one. So legging in is selling a call further out of the money. So now we have basically debit spread that I am already profitable on. So I sold this call further out of the money for more than I bought this call for. So I bought this call for $95. I sold this call for $155. The only difference is the timing on them, right? So I sold this one much later and it was much more valuable. So we already made whatever, 90 bucks on it. And now I also have exposure to this debit spread, which is a $200 max gain if it closes above 129 at expiration, which is next Friday. So that's what I did with CarMax. And there's GME. I opened up a Roth IRA. Yep, never had one before. I'm an idiot investor. And put all $6,000 into GME shares. So we've got shares in there as well. And what happened today, I don't have much explanation for. Next week, we might be on the moon. But with that, I bid you farewell. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT, if you please. can jump on our Discord as well. We're all trying to figure out what's going on. Okay. We will see you next week. Have a good weekend and just take it off. Take it easy. Okay. Peace out.